Welcome back to Launch Investing, where we dive into unique investment opportunities often overlooked in the mainstream. My journey with TAV Airports began on September 2022, following Mohnish Pabrai's notable investment. Since then, TAV has delivered a remarkable return of over 55% on a dollar basis in just 18 months. And I firmly believe we are only scratching the surface of its potential. That's why TAV Airports now represents my second largest investment, accounting for 15.5% of my portfolio, with more than half of it in gains. In today's video, I will revisit my investment thesis, reflect on the year 2023, and highlight key factors investors should watch in 2024. If you are new here, you might be questioning my decision. A $2 billion market cap company in Turkey, a country grappling with high inflation, how can that possibly be a wise investment? Those are fair questions, especially if you are not familiar with my approach to uncovering value. But let me offer you a different perspective. Attempting to outperform the market by focusing solely on the S&P 500, 750 or even 100 companies is an incredibly daunting challenge. With the financial world's eyes fixated on these firms, the likelihood of discovering undervalued stocks dwindles by the day. That's why I venture into less scrutinized territories, exploring opportunities that only a handful of anomaly-seeking value investors might notice. So, welcome to my channel. I encourage you to settle in with your beverage of choice. Stay with me till the end of this video, and perhaps you will uncover some hidden gems yourself. If you find value in my content, please consider subscribing and exploring my other videos. Now, let's dive into the world of TAV Airports. Before we jump in, please note, this is not financial advice. It is my personal view for your educational entertainment. Always do your own research. If you are curious about my 2024 investment thesis for TAV Airports, here it is. Their significant capital expenditure cycle is winding down, and it is time for them to harvest the rewards of their strategic investments. With an anticipated annual growth of 20% leading up to 2025, a compelling PE ratio of just 7, and a management team with a reputation for exceeding expectations, the investment case seems solid. So that's the essence of my thesis. And don't forget, you can use the video timestamps to navigate the topics of particular interest. So I would recommend watching the entire video to get the full picture. Now, on to fundamentals. TAV Airports is not an airline. They are an operator of 15 airports across 8 countries. And here is a crucial point. Their revenue from Turkish operations is not subject to the lira's volatility. It is predominantly in dollars and euros, which mitigates the currency risk. In fact, as this graph shows, their euro-denominated deals in Turkey could actually give them a financial boost due to their lira-based expenses. But there is more to TAV than just airport operations. Their portfolio includes services in ground handling, food, IT, and more. Including their subsidiaries, they are present in 33 countries and service 110 airports. Yet over 60% of their profit comes from their lucrative terminal operations. Now, let's take a look at the CEO's insights. In 2023, TAV Airports welcomed 96 million passengers, surpassing both the previous year and the 2019 pre-pandemic numbers. Despite challenges such as reduced traffic from Ukraine and Russia, the CEO highlights Almaty Airport's strategic position and Kazakhstan's growing tourism market, with expectations of significant fleet expansion. He points out Antalya Airport's upcoming capacity increase and retail space expansion, which aims to enhance both the passenger experience and the airport's commercial performance. Then his message goes on. He outlines TAV's strategic investments, amounting to 1.2 billion euros in infrastructure by 2025, bolstering the company's position to capitalize on the global growth trends supporting aviation. Financials show a 25% revenue increase to 1.3 billion euros, with a net income of 249 million euros, accounting for some one-off items. TAV's financial landscape is complex, requiring a keen eye for detail. More so than the simpler business models like Anadolu Efes, which I covered in my previous videos. Looking forward, TAV expects to serve up to 110 million passengers in 2024, aiming for revenues between 1.5 and 1.57 billion euros, and an EBITDA of 430 to 490 million euros. They project a CAGR of 14 to 18% from 2022 to 2025. These figures underscore my investment thesis. A business with robust growth, a strong moat, and trustworthy management is worth considering despite its complexities. Diving into TAV's financial, I won't get lost in the weeds. After all, investing is not just about the numbers. Yes, financials are crucial, but they are not the be-all and end-all. That said, TAV's numbers are indeed telling a positive story. Their revenue increased by 25%, EBITDA by 19%, and net profit impressively by 104%, though there are some one-off items skewing the profit figures. Capital expenditures expanded by 22%, which is expected given their ongoing projects, and passenger numbers up by 22%. Now, for the real testament to their solid management, TAV exceeded their own guidance on all key metrics for 2023. An exemplary show of underpromising and over-delivering. As for future expectations, the 2024-25 guidance reveals a sharp decrease in capex by 2025, hinting at the potential for dividend payments to resume as early as next year. Notice how they revised their 2025 projections upward, another promising sign. Highlighting traffic performance. Almaty Airport's 2023 traffic exceeded 2019's by 49%. This airport is a linchpin in TAV's portfolio, owned without any concession period to worry about. In terms of revenue breakdown, Almaty leads with 406 million euros, with Antalya bringing in almost 224 million euros. Antalya's figures are separate, likely due to TAV's unique ownership structure there. They have a 49% stake with equal voting rights and a claim to 50% of the dividends. One concern, however, is TAV's debt. It is a relief to see them prioritize their balance sheet over dividends last year. With total debt standing at 1.6 billion euros and a manageable average maturity of 4.5 years, the 6.9% cost of the debt is reasonable, especially compared to the current federal funds rate of 5.5%. Before we continue, a quick note. Mohnish Pabrai recently shared his wisdom on TAV in a Sum Zero session, which I will link down below. After this video, I highly recommend checking that out. Now, let's take a quick look at what Mohnish had to say.
The airport operator, the duty-free part of the business, is an incredible business. Every flight, every international flight that comes in, on average, about $1,500 gets spent amongst all those passengers on duty-free. And the airport operator ends up with about $600 per flight as their fee, which if you divide it by, let's say, 100 passengers or something, it's like $6 per passenger. The terminal fees, which is also what they charge for international, which normally is about $7 or $8 or $9 per passenger. Currently in Kazakhstan, that number in Almaty is like $3 or $4. That is being bumped up about 20% a year by TAV. They're not taking it to 8 in one shot, but it's going up. So basically, if you think about the per passenger revenue, the international per passenger revenue, which TAV is going to get when the new terminal is up, it'll be like something like $6 per passenger from duty free and probably another $5 or $6 from the passenger fees, which used to be $3. So what used to be $3 per passenger will soon be $11, on its way to about $15.
As Mohnish shares his insights, let's pause for a moment to consider the impact of Almaty on TAV's financials. Remember, a third of TAV's revenue is generated from Almaty alone, so any significant increase in income per passenger could potentially double the total business's revenue. And it's not just about the top line. These improvements are likely to boost margins substantially, making the potential uplift to the bottom line even more pronounced.
The other thing that has happened is that the traffic at Almaty, the passenger counts, they just actually today released some numbers. The 2024 passenger count and aircraft movement numbers are about 40% higher, 30 or 40% higher than 2019, which was the last year pre-COVID when things were normal. So they are basically getting an airport in 24 which is 30-40% larger in size in terms of passenger throughput and aircraft movement. Almaty is also one of the only airports where TAV does the fueling. They don't have the fueling rights at the other airports. It's very unusual for the airport operator to do the fueling. It's like you have a monopoly gas station for like 500 miles, and that fueling business has like a 40% margin. It's beautiful. Okay. and all these flights from Russia got diverted. Wow. And whatever. So the long and short of it is that TAV, the entire company, used to have a market cap which was like 600 to 800 million US dollars. Just the Almaty airport is probably, if they wanted to put it on sale in a few years, would go for, I don't know, 3 to 5 billion. And they have 15 other airports besides Almaty. So we are long and strong with no plans to lighten.
And the current market cap is 600 million?
Market cap used to be 600. It's moved up. It's approaching about 2 billion now, but it's still very low. It's very low for the size and scale. And Turkey just dropped all visa requirements for US citizens. Their tourism business is through the roof. 2024 numbers are looking like about 30% higher than 23. All their Turkish airports are on fire. I mean, they're just doing exceptionally well. Yeah. And all their international passenger revenues are very high. So company is executing really well, firing on all cylinders. It's a very good management team. Yeah, basically that Almaty airport that they bought for 400 million, including the CapEx, which was 2/3 finance at like 4%, 30-year fixed, was just an incredible deal.
So, as you can see, TAV has Almaty, that's worth possibly double of its market cap, and 15 other airports that they operate in. Switching gears, TAV traditionally operated like a utility, consistently paying out dividends. But as this graph shows, dividend payouts dipped when they ramped up capex for key projects. This strategic shift diverted funds to high-return investments, like the expansions in Almaty and Antalya, and the upcoming developments in Ankara. It is a smart move. Reinvesting capital beats dividends when the potential returns are this promising. TAV is not giving out dividends this year, but with Almaty's completion in sight and other projects progressing, I am optimistic about the 2025 dividend return. Now, to truly grasp the scale of TAV's undertakings in Antalya, it is not just an upgrade, it is a transformation. They are essentially constructing a new Antalya airport, poised to double terminal capacity and boost retail revenue per passenger. Imagine if Apple were to double the size of its iPhone and services segments in just 2 years. That is the level of growth we are talking about for TAV's second largest airport. Almaty follows suit, set to expand its capacity likewise. We are looking at a potential doubling of business for TAV's top 2 airports in a short time. Lastly, it is key to understand TAV's inherent operating leverage. As passenger volumes climb, their cash operational expenses don't pace the same increase. They grow more slowly. This dynamic is what enhances margins, making the business increasingly profitable as it scales. And there we have it, a deep dive into TAV Airports, a company poised for significant growth thanks to strategic investments, strong management, and the robust financial model with inherent operating leverage. As we have explored, the developments in Almaty and Antalya airports alone suggest a bright future, with the potential for dividend returns as the cherry on top. If you have found value in this analysis, don't forget to like, share, and subscribe. Until next time, keep researching, keep investing, and I hope you have the best luck with you. Thank you for watching, and I'll see you in the next one.